All right, let's jump into it. It's 10:07 on the 13th of the first, so Tuesday, and wow, what a start to the week. But all in all, what a start to the year. Like we've got so much stuff sort of going on at the moment, and it's all just coming out of left field, which is to be perfectly frank in that it's a bit frustrating to be able to sort of try and trade these things because you can do your sort of analysis on the weekend. You pick your levels, you say, look, this is the flow, this is what we're looking at. And then we'll get these headlines. Like yesterday, obviously, we saw Powell coming out, like sort of Trump's going after Powell again. Powell comes out with his sort of response video, and that absolutely just smashes the dollar. Like we know that how the dollar's going to react because we've sort of seen in the past, like last couple of months of last year when Trump was going after Powell, the dollar was getting hammered at that time as well. So you know how the market's going to react, but it's just you're not prepared for it. So we like if you look at the weekend review, I said look a little bit of weakness into the start of the week was expected from US dollar, or I was expecting from US dollar, but not at that speed and not not at that rate. And as soon as we sort of see that sort of all the capital flow out, and that's what we're picking. We're picking like when all the flow comes out of the US dollar, where's it going? Because it doesn't just go to okay, well now we go to the obviously a lot of it does go to the euro, but we see strengthening of the euro, we see strengthening of the other crosses, whether that be sort of like oh let's buy US dollar against that currency so much. It's just that it's sorry, sell US dollar against that currency. It's just overall weakness of that currency, and obviously things appreciate. So we saw Aussie push up a little bit. No breakouts or anything like this. It actually was a little bit subdued into the end of the session. So look, you know what I mean. It was expected, just not at that speed. So a lot of the capital, obviously, we saw go into the metals, and the metals have just been absolutely on fire. I mean, look, silver did I don't know, I think maybe 7% or something at its peak yesterday, which is just incredible. I mean, gold obviously new all-time highs, silver new all-time highs. These things are just absolutely pumping. So, look, I'll get to the charts in a moment, and we can sort of unpack that a little bit more. Anyway, look, pretty quiet through Asia in terms of data and news coming out. We had consumer sentiment for Aussie a little bit before. Not really a massive impact with it all. I guess positive, like in a positive direction, but still negative there. That's fine. It's not really going to move the market. And none of this is really, maybe a little bit of China data coming out at some stage, but again, nothing that's really going to be sort of moving the market. CPI is tonight, 12:30 local time, Melbourne time. Everything looks pretty much flat, maybe a slight tick up in the month on core. Again, with this one, if we do see a hotter CPI, this could see a little bit of a strengthening of the US dollar, plus on top of the sort of maybe a little bit of the unwind of yesterday's move because it was very drastic, very fast. Obviously, quick, fast profits generally get undone quite quickly. And I mean, look, it can change where the baselines are, but short, fast moves, you see some profit, you'll see some pullback. So that's probably what we'll be looking for today. A little bit of sort of a pullback of yesterday's moves, and then see if it's just basically a reload kind of time. Cool. All right, so we'll jump onto the charts. They'll start off with gold here. As you can see, sort of gold getting a little bit sold into just on the open. This is the open candle just here. We did have, this is the big move. So come the weekend, we had this we had this triangle that we sort of called out, and we saw the break, back test, and higher high, so above sort of, 45.17. That's really where, boom, obviously you saw the bulk of the move yesterday just take off, and that was, 10 o'clock, so just after open. And really, that's when that sort of video from Powell came out as well, and it just hammered up here. It's fluffed around a little bit. We did get another push, as you can see, sort of coming into the US session. So it's 12 o'clock here. So what I kind of tend to think with these things is like, when you get these large bits of sort of news data, things that are obviously significantly impacting the market. Yes, it's a 24-hour market, but you'll get a wave every time. Like, when London opens, you'll get a wave of reaction. When the US opens, you get a wave of reaction. Whether that be positive or negative, each time, it's their first kind of chance to respond to the news or data or whatever it may be. So, we saw that sort of push up again in the US session. But as you can see, well, I actually got higher than I thought, so I got double rejection from 20. But it's certainly up in this area here. We can see sellers have moved in, so we put a little, whoops, put a little resistance in here because that's obviously going to be if you're going to break a bit higher. But what it does sort of tell us is, as you can see, there was a little bit of a triangle here. So you got your flag, you got your triangle, ascending triangle, breakout, back test, high, high, and fail. So this whole sort of move just here, as it is right now, is obviously breaking out, and boom, now we come back to a fail. So we've got a failed breakout, and hence why probably that you're seeing this little move just on the open here now. So where do we go from here? I would say this is probably your support. So this is 65, so let's put a little alert in here. So underneath 65, further cooling on close under. So that's probably where I'd be sort of looking. And as I said, I think sort of really today you could probably expect a little bit of a pullback. So we could sort of chuck a fib on top of this and sort of say, where may we get this pullback to? Let's go. This one's going up, so it's going to be green, so we can differentiate the two. And we can sort of see, okay, how deep is this pullback going to come? I mean, obviously we're testing the 23%, and this is just on this last little run after this sort of pullback from, what was it, Wednesday last week? We had that sort of $200 pullback, and then what if we go on 40, $200 up here? No, what was this pullback? 45 to, as a $100 pullback to then a $300 move or whatever it is to the top side. It's just hard to sort of really comprehend these numbers because they're just such large sort of numbers here. Anyway, so what we're kind of looking for here is probably a little bit of a sort of pullback down here, and then we can start to say, okay, where if I was a buyer and or if I was sort of short and I'm trying to sort of close out the positions, where may I sort of be sort of targeting and where could we see a reaction from? So just off the top of the bat, we told for the top of the highs over here, so and that's in line pretty much with that 38%. So that's a little area where we could be expecting a little bit of a bounce. I would say, though, because we've got this horizontal here, should we break through this? I don't know if that's going to be the first one that's going to really be holding us. I'd say probably almost back down around these kind of areas here where we actually saw the more recent kind of breakout. So maybe around that sort of like, it sounds a bit sort of crazy in that, but these are the numbers we're dealing with at the moment. But should this thing come back down to around, say, 4,500, you've got the 61%, you've got this previous breakout point, because we had this as like, that's the higher high to double it up kind of thing. That's a previous breakout point, and then we move on there. So should we sort of get back down to this level over here, I would say that's probably where you could start to see buyers certainly step in to get another move up there, because this is on the 1 hour. But again, if you look at these things in a structural move, and you use that sort of 3 move, so we got move up, move back, attack the highs. You broke through. You move up, you've got resistance. We're in this second leg here now, so it's important to understand which leg we're kind of in with these things. Second leg, is it going to come to here? Is it going to here? That's the question. That's open-ended question. That's not really sort of a straight answer. But what we will most likely see is a pullback through here, and then another leg here. And this leg is going to be the one that tells us. Double top, high, high continuation, lower high, we come back down lower. Excuse me. So it's just important to remember sort of what leg we're in at what time. And if we're in this sort of pullback leg here, well, you're not holding this one for all-time highs of tops and all this kind of thing. You're in and out, you're taking your profits along with it all. You look for these areas where the buyers start to come back in. And as you can see, it's generally like, I mean, it's always great sort of hindsight, but you're going to get a couple of options. You know what I mean? Like, as you can see, the spike up here, there's sort of the buyers stepping in, took it down a little, spike up, top. So it's going to find a base. It's most likely, I say most likely, not going to do these kind of straight down, straight back up kind of moves like that. This is a V shape. I mean, obviously, this is all part of a larger structure of pretty much an inverted head and shoulders, but typically that's not how you're going to see it happen. You're going to get this kind of bottom here where there's a couple of hours, a couple of candles that are forming that base down there. So I would say sort of most likely, I mean, look, and this thing could just turn around, flip, and just go through the roof. I mean, everything sort of fundamentally seems to be supporting this thing at the moment. But this is on the 4 hour here. We do seem to be rolling over. We've got two bearish candles here. We've got the RSI overbought, sort of pulling back down here. I'd be looking for sort of some long entries, but I think we can get better long entries around this 45.20 to 44.90 into this kind of zone down over here. If we get a faster reaction, so if we get a reaction from say the 38% here, and it starts to drive up from there, well, that's obviously a far sort of higher level on the fib, and a 38% is a very strong continuation. So it's another thing that's to sort of unpack with these sort of Fibonacci's. If you see a continuation from the 38%, obviously your first target is just to target the sort of previous highs, but you've got a higher chance of continuation because the buyers have gone here, the buyers have gone here, the buyers have moved up here. They're moving up very fast with the price. If it comes down to the 61%, still a chance of continuation given everything with the sort of fundamentals at the moment, but there's a higher chance that either you'll get a double top or a lower high if you're coming off the 61%. You got a good risk reward for this move here, but there's a higher chance that we might start to range. So it's important to sort of really pay attention as to where the reaction comes from. But I would say we probably still have a little bit of downside. Maybe wait for this RSI to sort of cool off a little bit, at least minimum probably around to the 50, and then sort of see what happens. Given everything at the moment, probably next hour it's up over here. Like as I said, the technicals have gone out the window a little bit when you have all this sort of headline drama going on, but that is the sort of technical setup that I'll be looking for. Silver broke out, made new highs, but again, same sort of things happening here at the moment. We've sort of like come out the top side. Sorry, I'm slowly dying here. Anyway, look, it's come out the top side of what this previous all-time high was. And as you can see, we're back here testing it at the moment. So we can put in like, not that a wick is a great sort of level to use. I typically sort of prefer these body candles. But I would say that sort of obviously you can see that, you know, it's tried to find support here a couple of times. It rejected from this level here as well. This is on the 4 hour. It is a level that the market's looking at. So 83.60. So I think a close, excuse me, a close down underneath this level. Underneath this level here, I think will be sort of confirmation that we have a little bit of a pullback there as well. Same deal that we'll be looking at with the with gold. In a sense, we'll be looking at this sort of pullback as to where the reaction might be. You look for these things that are kind of confluences. So, for instance, we've got this resistance here. We've got this lining up potentially with the 38% as well. Should it break lower? Well, yeah, there's obviously a couple of levels that we've been looking at sort of down here as well. But I wouldn't be surprised. But given everything that's going on in the market, if it does get down here, you get a pretty strong reaction from 81.20 anyway. As to sort of whether that's the bottom or not, we'll have to see. They've obviously sort of sold this thing pretty hard on the open here. I mean, just to get a grasp of the speed of these sort of things here, and what we're dealing with nowadays, this has dropped $2 near 197. Pretty much, it has dropped from the high just this morning. What is it in the last 20 minutes? So it really is a market in which you got to sort of you got to get those position sizes correct because these things move so quickly. If you get on the wrong side of it, it can turn nasty pretty quickly. Because remember, like it was only a year ago we were down here. Where was it? Like start of I'd say only October on a 4 hour. On the daily, boom, boom, boom. So a year ago we're here at $30. You know what I mean? Like for a $2 move at this point, you know, that's equivalent to what it was there. So a $2 move used to be nearly 7%, which is kind of more than we ever saw. But now it does $2 in 20 minutes. So these are the things you got to really be aware of. That you know, it's a different game to be trading the metals at the moment than it used to be. Anyway, sort of the here and now with it all. Obviously, we're coming back. We're retesting this level here. Seems to be trying to maybe hold it. I don't know. I'm not really sort of too keen on it. I wouldn't be buying it right now, but I've missed the boat on a few of these things, so maybe I'm not an authority on that. But certainly with the RSI too high here, looking like it wants to push down, looking like a fake breakout at the moment, looking like we had super fast profits made by a lot of people yesterday. I wouldn't be surprised to see some cooling and then see another attempt. As I said, the idea with this at the moment, again, is to understand what leg we're in. We've got the move up, we've found resistance. Now we're going to come back, we're going to find support. Where are we going to find support? Previous resistance levels are the kind of levels that we're looking for to see how the bounce goes. And again, how deep it comes is going to tell us the likelihood that we're going to see another leg up. If we see the bounce from 38%, so from 81.50, then there's a good chance we get continuation. If we see the bounce from 61, there's still a chance of continuation, but more likely we're going to find some troubles and hassles on the way moving up to sort of get back to those all-time highs, unless we have some other bit of data or news that sort of comes out with it all. Look, I mean, at the moment it's at 23%. Should it continue from the 23%? Well, yeah, I would say definitely you got sort of a higher move there. Because again, if you just think about what's actually happening, here are your buyers, there are your sellers. Oops. The buyers are then sort of going, hey, look, I'll move my bid to here. Like they're not waiting. There's not much profit taking. The buyers are going, I don't care what I'm paying for it, I'll buy it here. And why would you buy it here? Because you think it's going up over here. It doesn't matter. Like if you buy it at 83 and it's going to 90, well, you'll take that. And people don't want to miss the boat. But should they go, hey, look, we'll do it at a slower rate, so come back down to the 61, and here's some people taking profit, we know part of the market's at least taking profit. The thing that causes these things to go just absolutely bonkers north is the fact that a lot of the participants aren't taking profit. So you'll see these sell downs, but the sell down doesn't come very far because it runs out of sellers. So the buyers go, I'll buy more, I'll buy more, buy more, buy more. It's just none available. It's all very well you want to buy it at 80 now, but if nobody's there to sell it to you, what do you have to do? You move your bid up. You move your bid up. And that's why this Fibonacci is very important as to tell the strength of this continuation or potential continuation move. All right. So yeah, levels I'll be looking for here, probably around 81.40. If we do go through 81.40, then probably around this 61, so 78, which again, look, it seems absolutely crazy to sort of say that you come back over here. And given everything that's happened in terms of, as I said, there's so much going on at the moment. We got Iran kicking off. We got Greenland going off. We got the Fed with Trump going off. I'm sure I've sort of missed a couple of other things as well on the local front as well, but yeah, there is a bucket going on at the moment, and the thing is with the market, it doesn't like the uncertainty. We saw this because the US dollar, the DXY, just got absolutely hammered yesterday on the idea that, oh no, the Fed's going to be intervened with interfered with, sorry, by Trump or the administration there. And I mean, they're supposed to be independent. But yeah, if that's at risk, then markets like, I don't want to barter that. We saw it last year. US dollar got absolutely hammered, but we're seeing it again now. So we'll see how we go, but let's put a little alert under here because this can tell us that we're going down a little bit lower. So I think the play here is to sort of say, look, obviously it's tough to be sort of shorting these things at the top over here, but should we break down through these levels? I think there's probably a fairly decent move to be coming. I mean, 80 is obviously around the 50%. It's that big psychological level as well. I think certainly if you get back to these levels over here, this is where the market will definitely have another bounce. Should we get down to these levels here? If it comes in a little bit earlier, well, I think there's a higher chance of continuation. On the Aussie, Aussie sort of bounced back yesterday. Again, I think Aussie, look, honestly, I do believe it's probably more moving off the weakness of the US dollar opposed to Aussie strength. We saw last week Aussie get absolutely obliterated post CPI. Obviously, the dollar was on a little bit of a push there as well. But we saw yesterday a big move up, well, big-ish move, 50 points or so from its lows / open. But again, it's finding resistance in that 20s level. Aussie's one of those ones. I say this all the time, but you know the levels with the Aussies. Aussies 60s, 90s, and 20s. You've always got a good chance of a trade going sort of either way with these ones. I think even here we got down right in. Whoops, I think we got right into the 60s here. Where we get to? Yeah, so there you go. So into the 60s, pivot, bang, move up. Where do we find resistance? We find it, at right on 20, pretty much 21. So, if you know the levels with Aussie, you generally find these do repeat a lot. I think I marked it out on this other one. We've gone above it all now here, but you can see the pivots from these levels are always repeated quite well. Like, it might be a couple of points either side of it all, but 60s, 90s, and 20s. If you're trying to sort of counter trade things, or if you're looking to take profit, they're generally the levels to sort of secure a little bit of your partials. So with Aussie in that, look, it has found resistance here. It doesn't mean that this bounce move's done. We'll have to sort of see what happens with the US at the moment. It found support around the same time. This is pretty much the level that we could see that was a little bit of a breakout. Look, back tested it. It's found resistance here. It's kind of consolidating between these two zones here. Back below 67. I'm going to say we've got downside. But again, as I said, 60s, 90s, and 20s. So if it comes down and tests these 90s down here, like this move here, and we see that the buyers move up from here, that could be indication of a further move up, in my opinion. So I would be reluctant to be buying Aussie at the moment. I do believe you'll probably sort of test over here. We're looking a little bit overbought. This is on the 4 hour. Break below 67. See what happens down in the 90s. If we see the buyers through this section down over here, so think about you got the buyers over here collectively, wherever you want to say they are, just say it's here. If we see them move up their bid and they hold the 90s and then it goes back over 67 again, I think that could be the idea that, and we've got some data coming out. We got that kind of trajectory of the move happening. Should this, let's put this in a different color, orange or something. That could be the trajectory that we're looking at. Should we see this move come up and the buyers sort of hold this level through here? Again, look, a lot of it's going to be predicated on what happens with the US dollar. But I would still be reluctant, given the fact that we're overbought on the 4 hour. We've found rejection. We've got three bearish candles at the moment. Confirmation underneath 67. Watch what happens at 66.90. You break through 66.90, then I think this is a flare up, and we're coming down. Because if you zoom out on this, we had this big sort of rising support here. It's broken. This is actually technically kind of like a back test. So should you break through these lows down over here, well, that confirms this kind of move coming down over to here. And we can sort of see what happens with the buyers and that sort of moving up over there. But short term, I would say wait for see what happens in 66.90s to see how this moves. DXY, finally, I'll sort of finish on. As you can see, look, it is respecting the chart. And this is all I ever ask of these things, is that it respects the chart. As I said, on the weekend, I said, look, okay, we're going to have some sort of pullback here. I did not expect that, because you can't tell with these headlines. Who the hell had that on their bingo card? I hate that expression, but didn't have that one on my bingo card, that Trump was going to go after Powell again for building costs of the Fed or something like this. And then that Powell's got to come out swinging, saying, "Hey, look, you know what? It's all true. It's all made up," and he's actually attacking the integrity of the Fed. And that's the real reason the US dollar got smashed yesterday. It's coupled with the fact of what's going on with Iran and all this kind of stuff. And okay, everyone's war go to metals, but I mean, at its heart, US dollar is supposed to be a safe haven. So during times of war, or we're not in war, but there's a bunch of geopolitical crap going on at the moment. Um, the dollar should be catching a bid, but then while you're having flight to safety for capital, which you can tell by equity markets coming off, you're sort of seeing the market not choose US dollar as a place to park their capital, because you've got the worry about what's happening with the Fed. So, obviously, bang, smashes down. Everything has to find a safe haven, and it goes to metals. I mean, even yen. I mean, yen's been ridiculously weak for a long time, but that's supposed to be a safe haven currency as well, and that got smashed as yesterday as well. So it is a really tough sort of read at the moment, and this is why I sort of think that sort of like particularly just going back a second for Aussie, that I think that Aussie move is more weakness of the US dollar because Aussie is a risk asset. And so if markets going risk off, equity markets were coming down, um, you know, people were sort of like looking for safe haven slash just buying metals. Um, Aussie should have sold off as well because Aussie is a risk asset. And if a market's in risk off mode, well, Aussie should have been hit, but Aussie didn't. Aussie appreciated. So I think that move with Aussie is more US dollar weakness driven, opposed to, hey, you know what, everything's dandy, let's go buy some risk on asset, which is Aussie. Uh, Aussie could also be a bit of a proxy just for the metals there as well. Anyway, back to the DXY. Look, it found resistance. It actually looked pretty good on the open for about half an hour till that headlines and all that Trump stuff came out. I mean, if you have a look at the open yesterday, it was just this bit here, and straight away they pushed up into it, and then bang, you can see 11 o'clock. That's right when that Trump stuff and Powell stuff came out, and it got absolutely obliterated. Look, it did hold the zones a little bit. Let's jump back onto the 4 hour. I thought maybe this earlier zone may have held, but as you can see, this previous one, and this is what I always say, sort of like, support, where did market find resistance? It's the same level each time. So, these are important things to note because these are what are going to give us our confirmation. So we'll put a little alert underneath here and we'll say, look, it's probably going to fail if it comes down under here. And a deeper correction definitely in tow, and then we're probably looking down 98.50, 98.20. If you get down here, you probably could almost sort of say that's cooked. Anyway, point being is that it found resistance on point, it found support on point. Now we've got to see what happens with this leg here, because again, same sort of thing that I was saying, like with the metals. What leg are you in? We move up, we find resistance. We move back, we find support. Where did support come? Previous resistance, that's fine. We're in this leg here now. Now, this is going to be the important one. If we only get to here and we find resistance and it comes like this, well, there you go. There's your deeper sort of correction with it all. However, if we get a push back up over here, there is still a chance that the US dollar could just, that could be just a blip, like, a big blip, but it could just also be a bit of a blip. So we'll have to sort of see how this one sort of plays out. But I think certainly, look, it's under pressure with it all. It's certainly not stacking up a lot with it. One thing that does go positive for US dollar is that we have the US tens, which is generally a pretty good indication of where you're going to see the strength with it. And despite all this stuff going on at the moment, this is pushing up higher. So, it's all these talks about cuts and all these things and all this kind of sort of stuff. Let's put a little support in here because this looks pretty good through here. Look, there's all this sort of talk about sort of cuts and all this kind of stuff, but they're holding this fairly well at the moment, and it is looking like a potential breakout through here. So should this thing sort of push up over, so I've got an alert at 420, let's push this up a little bit and say, where we go to, about here. So if we see this sort of break a bit higher, then, first move's probably around sort of 433. That's going to keep the US dollar from getting absolutely obliterated. Not entirely, because we have seen in the past that sort of like, yields can go up and the dollar can still sink, but there is a higher chance of it than if, say, if the dollar was coming off plus the yields were coming off. Well, you know what I mean. You could tell it's probably going to be a bit more carnage for US dollar there. So back onto DXY. So yes, this is basically where we're at. We've got a back test here. We want to see continuation of this move. So let's put an alert over the top of this. 99.35, let's say continuation. Seems tough at the moment. It's 4 hour. Oh no, it's the daily, sorry. 4 hour actually sort of does seem, look, it's sort of pulled back here. It's oversold. So, look, I think we are going to get some sort of progression through this session. As I said, I think there was a lot of fast profits yesterday. If we see the metals come off, I think the US dollar is going to get back on the bid. But you want to see that break that high, because obviously we know that the sellers are here. We saw it twice over Friday and yesterday morning. We want to see absence of sort of sellers at this point. Next target above that is 100, and then we're really getting into major breakout territory. And of course, we got CPI tonight. If CPI comes in hot, it kind of kills the argument a little bit for supercuts, which then is kind of, even if it's not strictly hawkish, it's moving in that hawkish direction, which will give a bid to the US dollar. All right, that's it from me.